Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 21st of May 2019, so welcome everyone. Welcome to this Tuesday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff basically. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's jump into the charts. Now the first one I'm going to touch on here is the FTSE100. Now yesterday I talked about this one in my traders tea time. And what I was saying, guys, to keep a close eye on this area right here around the 7,280 zone. So yesterday we managed to break it to the downside, this key important support zone, but got held near the 200 EMA. And like I said, at the time of when we were looking at this one during my traders tea time, we were just stuck here slightly above this, and as you can see, the index managed to travel higher, retrace from there and travel higher, but can still fail to push back above these other two EMAs, the 50 and the 100, shown as the red and the green lines respectively. So for now we're going to continue observing this one, but we're going to be very careful around these levels, and basically on the downside we still have this 7,280 zone, also around the 200 EMA as well. So this is what we're going to be targeting. Basically we need to see a nice good drop below this 200 EMA before we could examine some more declines, maybe a push towards the 7,220 zone approximately there, or even actually going further down towards this key area of support near the 7,150 line. So for now, keep an eye on this level here on the 7,280, slightly below that. Like I said, we do have this 200 EMA, which we're gonna also monitor carefully, and then we'll just take it from there if we see further declines below that 200 EMA. In terms of the upside, well, we need to see a nice good strong push above the Friday's highs near the 7,355 level. Ideally we'd like to see the 4-hour candle closing above this level, and if we do see something like this, then yep, we could target slightly higher levels like the 7,420 marked by the high of the 3rd of May, and but this is where we will take a pause, because this is where the index might meet its this downside resistance line taken from the high of May 2018, and this is where the price could stall for a while temporarily, and of course for us, let's say, to continue targeting higher areas, we would like to see a nice good break and a close above this downside resistance line. But until then, we will continue only targeting this level here, the 7,420 zone approximately there, and then we'll just take it from there, see what it wants to do. If it wants to travel higher, then that's great. We will aim for higher levels, and we will aim for the high here, the highest point of April, which was around the 7,530 zone, so approximately there. But again, before we could consider these much higher levels, we need to see a nice good break and a close above this downside resistance line, this long-term downside resistance line. So for now, keep your eyes on this level here from the very short-term perspective, the 7,355, and on the downside is the 200 EMA that we're keeping a close eye on here on the 4-hour chart. Ethereum. very quickly on this one. So this one's stuck at its psychological 250 level. Of course, it did have a nice rally, as you can see that here we did have this nice good push last week, and but then kind of sold off and traveled on Friday. It sold off and traveled lower. It found good support around here near the 223 zone, from which, as you can see, it reversed back to the upside and pushed higher. Of course, it failed to reach these highs, these so far the May highs near the 280 zone. It managed to only reach this little area here around the 265 barrier. But for now, what I want you kind of to keep a close eye on here is this little potential triangle formation here, guys. So basically, in other words, the crypto is coiling up. It seems that it is ready to pop somewhere. Let's see which way is it going to go, because this is, to be honest, this is a 50-50 chance here. It could travel higher, it could travel lower. That's why for now, if, let's say, if we see a drop below this lower side of the triangle, what we're going to do here, we're not going to go crazy to the downside too much. We're just going to target this 223 level first. We'll see if it actually manages to hold the crypto from kind of falling further down. But of course, this is going to be like very interesting to see. But that's what we're going to target for now. If, of course, if this 223 breaks, this would confirm a forthcoming lower low, and we could then see a further slide lower, maybe even going towards this little area right here. Let me just put this on the chart. So that's around the 202 zone, or in a way you could actually put it towards the psychological 200 level, so straight away here. So that's what we're going to be targeting if we see a drop below the 223 level. But again, before we can consider that, we need to see that nice good break of the lower side of this triangle formation. If the upper side breaks and we see a push above the 265 level, now this is, to be honest, going to be a little bit more exciting, because yep, we could revisit the 280 zone, but if that fails to withhold, now this is where the crypto could confirm a forthcoming higher high, and yep, might as well maybe travel all the way towards the 300 level. But then again, let's not over speculate too much on this one. If we see a push above the upper side of this triangle, that's great, but for better confirmation, ideally we would like to see a nice good break above the 265 level. So for now, continue observing these levels, continue monitoring these sides of the potential triangle formation, and yep, let's see how this is gonna how it's gonna play out further. AUDJPY. Now, I talked about this one yesterday, and in my Traders Espresso, and basically we were already trading above this downside resistance line, but the pair continued to struggle to overcome this key important barrier here near the 76.32 zone. So you can see, but this is what I was saying, basically we need to see that nice good break, and ideally a close of the 4-hour candle above this level before we could target higher levels. As you can see, the pair now is kind of retracing back down. It fell back below this downside resistance line. Of course, this is not looking good for the AUDJPY pair, but for us, what we're going to target here is, in order for us, let's say, to target much lower areas, we would ideally like to see a drop below this this low that we saw here last Friday near the 75.30 zone. So basically the lowest point of last week. We need to see a drop below this before considering further declines, and this is where we will aim for the 74.50 or even lower. But for now, again, we're going to remain very cautious here, just in case this suddenly, let's say, reverses back sharply to the upside, and even then we will still stick to our previous idea here. We need to see that nice good break and a close above the 76.32 zone approximately there before we could consider higher levels. Jumping into another pair very quickly, GBPCHF. Now I talked about this one previously as well, and basically yesterday it continued to fall below this last week's low near the 1.2850 zone. It traveled lower, but kind of got held near this key important area of support near the 1.2820, from which it kind of reversed back to the upside. And a good sign here is that the fact that it's already trading above its pivot. So of course this creates this positive atmosphere, but still don't kind of get too excited yet, because ideally what we need here, if you look at this chart, of course ideally initially we would like to see a push above this level right here near the 1.2890. A nice good break above this could potentially send this one a little bit higher towards the 1.2915 area approximately there, which previously, as you can see, acted as a very strong area of support here back on the 21st of March and also on the 29th of March. So if we see a further push above that, then yep, this is where it could turn out to be quite well, could turn out to be great for the bulls. More of them could start joining in potentially, and leading this one back towards the psychological 130 level. So we're not going to go too much to the upside yet. We'll just go step by step and yep, see how it performs. But again, like I said, for now, be very careful. Of course, this pair still, or in general, the pound still remains vulnerable to any kind of Brexit related news releases and headlines, and that's why we're going to be very cautious on this one. But still, we will target this little area here around the 1.2890, and then just take it from there, see if it actually wants to break it above it. If it does, then that's great news, and then we'll continue climbing towards these slightly higher levels, but we'll do that very slowly, and just of course with a pinch of salt. Still keep an eye on the news development and the developments around Brexit. In terms of the downside, now what we're going to monitor here is of course the 1.2820. A nice good break below that could send the pair further down towards the 1.2775 zone, which previously acted as a very good area of support back here on around the 21st of January this year. So keep your eyes on this one, guys. Of course, like I said, it is showing hope, but again, before we could let's say aim for slightly higher levels, we need to see that nice good break above this key area of resistance at 1.2890, and then we'll take it from there. Slightly similar story with the GBP yen here. It did travel now above this downside resistance line, this short term. Some may say it's a bit of a tentative one, but this short term downside resistance line taken from the high of 3rd of May is now broken. But the only thing is it didn't have like a clear break here. It just kind of dragged itself out of through it. So what we're going to do here, guys, is we're going to keep a close eye on some of these key resistance levels before kind of we get excited, let's say, with the upside. And again, with the same story here, guys, it might sell off as well, but that's why we're going to be very cautious on this one. That's why for us, let's say, to consider higher levels, we would like to see a nice good push back above the 141.10 level approximately there. Only then we will consider kind of higher areas, because for now, like I said, it could still roll over here, it could still break below it, and we're going to remain somewhat neutral right now. So if we see a push above the 141.0710 area approximately there, then we will aim for higher levels. For now, we're just going to continue observing it and see how it's going to perform. If this suddenly drops below the last week's lows near the 139.55 level, now this is where it could again turn out to be ugly for GBP yen, and we could see further declines. And let me just find a good potential target here underneath, because like I said, it is a bit of a a new area here for or newish area. Last time it was only tested in January this year, so basically came back all the way here down. So in a way we could target this 138.60 level, which marks which is the inside swing low of the 14th of January. So very good potential target here, but again, we will only consider that level if we see a drop below this area, below the last week's low near the 139.55 zone. So keep your eyes on this one, guys. And the last pair very quickly, and that's EURGBP. Very interesting pair, at the same time very tricky one. So it continues to rally here, it continues to climb higher. Yesterday it tried to push to the upside, managed to reach a nice area here near the 0.8785, but as you can see, it kind of failed to kind of push further up and retraced back down. It's now currently sitting again near its upside support line, this upside support line taken from the low of the 5th of May. Now again, some might say that it's a bit overextended here on the 4-hour chart to the upside, but again, until we see a nice good break of this upside support line, and ideally we would like to see a drop below this 0.8748 zone approximately there before we can consider, let's say, a possible decline here. Maybe the decline could be just a small temporary correction, but nevertheless the downside, at least in the short run, we will only consider if we see a break of this upside support line, and if we see a drop below the 0.8748 zone, and that's of course considering the fact where the rate is currently. Now, one kind of negative aspect about this right now is that it managed to drop this morning already below the pivot, below its pivot, and of course it's testing it from underneath now, but again, this still for us, like I said, before we could consider lower areas, we need to see that nice good break and close below this upside support line, and then ideally a nice good drop below the 0.8748 zone, and only then we will target slightly lower areas. In terms of the upside, well, a break above the yesterday's highs near the 0.8785 could open the path towards higher levels. Of course, this would confirm a forthcoming higher high, and it could potentially target some of these areas right here, maybe even actually going all the way here towards the 0.8840, but to be honest, a 0.88 level itself could be a nice target, and slightly above that we do have this little high of the 7th of February near the 0.8815 zone. So good potential target. We will consider that level if we see a push above the yesterday's highs here near the 0.8785 level. So okay guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me later on at my traders tea time, and that's as always 13:15 GMT time. For now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.